Dalal Street sees its biggest weekly gain of 2024 amidst volatility. The Sensex and the Nifty gained over 3% in what was a historic week. The Nifty IT saw its biggest weekly gain in over 4 years. On this week's edition of the Editors Roundtable, we put the spotlight on what has been a massive week, the election week for the markets. In terms of sectors, we also look at the FMCG space and capital goods. And of course, the way valuation multiples are moving around and if there's a portfolio churn that perhaps is underway. We also talk about why Chandrababu Naidu is the most valued player this week. I'm Surabhi Upadhyay, and with me are Nigel D'Souza and Prashant Nair. You're with us on Editors Roundtable, and also with us on the show this week, we have Nilesh Shah, MD and CEO of Envision Capital. Guys, great to finally just say that, you know, it's over. This roller coaster mega week has finally come to an end. I can't believe it.
Welcome to the table.
I think I picked a good week to make my debut.
Surabhi's first time,
yeah.
Not the last, but what a week, right?
Yeah.
And I think Nilesh, I don't know, we talk about a V-shaped recovery.
Yeah.
But this is not a V-shaped recovery. This is a I-shaped recovery.
It's like this.
It's unexpected, absolutely. Or was it expected? I don't know. I mean, today's move was just powerful beyond what anyone thought. And this at a time when FIs this week have sold some 18,000 crores in stocks.
3 days, it's 25,000 crores. I mean, counting day and the 2 days post. And for the full week, it's about 18,000.
Mutual funds have bought, but they bought about, what, 7,000 crores in cash. Actually, let me just put those numbers up for our viewers, if we can, just to kind of recap and jog the memory, because it looks like at the end of the week that we've lived through a lifetime, literally, right? It seems like a long, long time. So Monday's high after the exit poll reaction was, what, 23,340. That was the euphoric 3% pop that the Nifty saw. Tuesday, of course, was disappointment, long faces. The market fell, and the low there that day on Nifty was 21,281. And today's high, Friday's high is 23,320. So you basically were just, 20 points, 30 points away at the high point of the day from the all-time high. So that is the extent of the recovery that we've seen, and which means that we're actually up for the week. We're up from Friday's close substantially on the Nifty. Sectorally, a lot moved, right? CPSC, PSUs was, of course, the big worry point. But there was damage, but the index ended just 1.6%. It could have been any week, didn't have to be an election week. So, I mean, if you look at it like that, IT was actually the one sector which went unnoticed, under the radar. But I think that's what a lot of people went into. So 8% on the Nifty IT index. FMCG index, the immediate reaction was sort of money moving there, 7% there, auto index 7%, and the floors picture will come up. As I said already, 18 negative from FIIs and about 6,900 crores positive coming through DIS.
I think the market has a way of surprising, right? I remember all the chatter, and I think a lot of us also thought that maybe after this level of volatility, things will quiet out. And there was this chatter about whether the market will change into maybe becoming a bit of a boring space now, because the poll verdict is not, maybe in sync with what the market's best case scenario was. But it's very different.
Well, let's get Nilesh's view. Nilesh, sometimes post a big event, there's so-called this unsaid thing that domestic money is at play. And the big domestic money will support the market in the near term. But this is not support. The markets are up 2,000 points, in the last 3.5 days or so. How do you approach the market? Do you think on the Nifty, we're nearing the near-term peak and stock-specific action continues? Or do you believe even the headline index can move from here?
So, Nigel, I don't think we're near a peak.
Okay.
I still think the market has a lot in store for its going. I think step into a month from now, it's going to be totally event-packed. The expectations around the budget, the monsoon, the earnings season, all of that. And I still think all of that still is more positive than kind of negative. So I actually believe that this election verdict will ensure that the government in its third term will actually bring even a bigger focus on the economy. I think that's going to be the very big focus. 2 large states will have a very important role to play. That's going to see a huge amount of spending on infrastructure. I probably think also the concerns around, the government straying from the path of fiscal consolidation might be overdone. That may not necessarily happen. So I think on the whole, I still think that there's a lot which the market has for its going.
Let me just play the devil's advocate for 1 second, right? Friday, if you were speaking last Friday and you spoke with foreign investors, they would tell you that India deserves a premium because there is so much political stability here, and that is expected to continue. There is political stability even now, but maybe a slightly weaker market looks at incremental stuff, right? Not the absolute, but the incremental change. Now, the incremental change politically is slightly to the downside, not to the upside, right? You'd agree with that, Nilesh. So does the market need to price that in some level? Because sitting this Friday as compared to last Friday, that political continuity dividend will be higher or lower?
See, I think concerns of the FPIs have been more around valuations. I think their bigger challenge is not so much about political stability, where there's more of it, less of it. It's been about valuations, because they continuously compare India with the entire emerging market pack. And they say, what's China trading at? What's Russia trading at? What's Taiwan trading at? And optically, all of them look so cheap versus India. Okay? So I think my interaction with them has essentially conveyed one thing, that they're just waiting for some correction in the market. I think whenever you probably see maybe a 5 to 10% correction, they will come in big time. Okay, so I'm honestly less worried about that. I think what we really have to now just focus on for the next few weeks is essentially what are the priorities of the new administration, the new government. I think if the signaling is fine, the signaling is correct, it's on the right trajectory, I think this bull market has many legs to go.
But, Nilesh, just on that point of, will FPIs come in or not, technically they got that 6% drop on counting day. Maybe it was too sudden for people to sort of make up their minds on what to do. But we're back to the valuation question, right? Because we're again talking on this Friday at, virtually at all-time highs. And the same question, how much is really left on the table if you're going to buy stocks now at, 60, 70, 80 PE? What's the thought?
So if you look at the entire valuation kind of paradox, you still had the IT and the FMCG, which was not firing earlier, okay? And where valuations had become a lot more reasonable versus where they were maybe 2 years, 3 years, especially for the FMCG pack. IT has been reasonable, the challenges have been more around growth. I think that's really the two pockets which probably can fire a lot more, apart from, of course, the entire private banking space. So I still think that if they wish to really take that call, I still think there's kind of a lot of room for them to invest, pick their chosen sectors and really come in. The other thing, of course, is that I think the faith of the domestic investors continues unrelentlessly. I think that's there, that's on, they continue to be committed. I have not heard anybody wanting to pull out money out of the market or essentially back out on their SIP commitments. That's not something which one has really heard of. So as long as also the domestic investors continue, I don't really see a challenge from a liquidity point of view to this market.
That will be that story that Yash did, Nilesh and Nigel. Basically, on Tuesday, when the market fell, mutual fund orders which people put in were not executed at the NAV of that day, because if you put orders in before 2 o'clock, you should get that day's NAV. So on Tuesday, market was by 2 o'clock was already down 1,700, 1,800 points. And the data suggests that, and this is from brokers, large brokers, that number of orders were twice the usual to buy mutual fund NAVs. I mean, it kind of tells you, this sort of supports your point, which is that local investor interest in the market on dips remains very, very high.
And Prashant, the right parameter to probably look at is what was the month-end cash holdings of mutual funds on May 31st. Maybe some of them got fresh subscriptions but chose to be in cash on the eve of the election results. Okay, probably they were just kind of hedging for an event. So I think that might just be a very interesting data point. If that data point just shows that there was probably 20, 30, 40,000 crores of just cash lying to be deployed, who knows, that deployment is happening post the event.
Okay, all right. Nilesh, let's focus on a couple of sectors and themes as well. Well, there was a time when the FMCG stocks, they traded at 70 times. And capital goods, well, they sell between 18 to 25 times odd sort of multiples. So, tell us, how has this panned out? Now this week the FMCG stocks came back in style.
Exactly. So, I was just looking at a lot of notes, because the debate the entire week has been about whether you need to shift your portfolio, whether you need to unload a little bit of capital goods, so basically economy facing. So, I took up capital goods as one particular pocket. So the whole debate was whether you should be unloading of PSUs, unloading of capital goods, manufacturing, infra, and moving towards defensives. And we saw that on Tuesday, there was this massive rush for safety. So anyway, let's talk about valuations and how these numbers have absolutely converged. It's been a story, a study in itself. So these are numbers FY26 for some of the prime capital goods stocks, and many of them are, of course, MNC companies. So ABB is right at the top of the pack, 92 times. Hitachi Energy 78 times. And look at the corresponding moves in stock prices. Valuations are up because these have become growth stocks. At one point in time, they were value stocks. But look at the appreciation. Hitachi Energy is up 163%. Siemens and CG Power, they've done really well. 80%, 90% growth in these stocks in the course of the last 1 year. Thermax 127%. And look at GE T&D. 535%. So valuations on these capital goods names, which are many of them are MNCs, they're ranging anywhere between 50 times, going all the way up to almost 80 times for some of the names like ABB. Now, contrast this with FMCG. FMCG was the original sector that would trade at, 70 times. Those were the heydays of, the staples era. But now that's changed. So Nestle is the one that's, if these are FY26 numbers, by the way, that I looked at. So about 60, 61 times on Nestle makes it the most valued stock. Godrej comes in at a second at about 50 times. Lever, so these valuation multiples, they've been trending down. Lever itself is at 50 times. They're obviously at a discount to what the historic averages were. Colgate at 48 times. And look at the stock price performance. Lever hasn't moved. I mean, throughout the year. The others are up anywhere between 7-8% to about 11-12%. These have done a little better. Marico, for instance, slightly better. But even here, the valuation multiples have all come down to the 40s, mid-40s. And it's the capital goods space where the valuations have moved up to 80 times. And that's the change that we're talking about. Whether this event that happened, whether that offered a bit of an opportunity for a reset. And, Nilesh, that's really my question to you as well. Now, it happened too quickly. I mean, the bounce back also was very, very swift. The whole correction in this space lasted for almost just 1 day, 2 days. But what would you be doing? Do you see more valuation comfort in stocks in the FMCG arena? And would you become a buyer over there?
Oh, yeah, absolutely. I mean, I wouldn't kind of necessarily allude to just FMCG, but the overall consumer space. The consumer space has been good. Pockets of consumer space have been good, particularly the ones around premiumization, not necessarily the staples, but the non-staple side. That's essentially been the sectors connected with lifestyle, changes in lifestyle, alcoholic beverages and that kind of space. I think that's been doing very well. There was a correction that we saw even in those pockets, and I think that gave a good opportunity. I still believe that the growth is very strong in those pockets, and the valuations did get reset temporarily, and so that creates the opportunity. Regarding the big consumer staple names, I think they will still continue to enjoy tailwinds because of this whole, a bit of the risk-off trade that is kind of playing out. Crude is kind of sobered down a bit, which will drive margins. And then, of course, if the rural spending comes back, you would see this sector having some slightly better earnings growth.
Will it be at the expense of an ABB at 92 times or a Siemens? Or a BHEL for that matter. Some of the brokers started pruning their estimates, and there were some downgrades that came in through the course of the week.
I don't think the earnings slowdown is going to happen with capital goods.
Okay.
I still think that is going to continue. I think what we saw between 2019 and 2024 is something which is going to extend beyond 24 as well. I don't see the focus on infrastructure coming off at all. The focus on energy, the focus on cap goods, the focus on manufacturing, I don't see that kind of coming off in any kind of a way. If at all, it will gather momentum. So if you flash back to 2004, when we saw a bit of a similar situation, huge correction in 2004 for that 1 day, 1 week.
Yeah.
But after that, from 2004 to 2007, you saw again a mega bull market, again in the same cap goods, real estate, infrastructure, power, energy space.
We all remember that, yes.
And I wouldn't be surprised if history repeats itself.
Wow.
All right, we'll take a quick commercial break on that note. We come back and we decode the week in some more detail. We'll ask Nilesh what he did this week as well, right? The Chandrababu Naidu sort of theme played out, stocks played out, and Nigel has been talking about this all week, so we recap some of that as well. We're back with that. Welcome back. You're still with us here on the Editors Roundtable. Time for Nigel to tell us why Chandrababu Naidu is making waves in stock markets as well. Nigel, tell us.
Any of you all had played basketball in your life? You all put up?
I mean, occasionally, but nothing serious.
So the MVP, right? The most valuable player. That was Chandrababu Naidu for this week. Not just in politics, but also for the stock market. So let's tell you about that. Let's pull up that picture of Chandrababu Naidu. He was the man of the week itself, right? He's got close to around 16 MPs, and he was the kingmaker actually. And who would have thought? Now there are a few stocks that are moving around based on the so-called Naidu effect. Heritage Foods, he's the promoter entity in there, and just looking at it, well, the fundamentals as well of the company have been improving, or that's what the street believes as well. So the last year they were around 11 rupees, but the next couple of years the street believes that it's going to go to 22 rupees. So they believe there's going to be an improvement on ground. Looking at the valuations, even after this 50% move that we saw in this week itself, well, it trades at close to around 31 times. The 5-year average is around 29 times. So in that context, it's not very, very expensive. What is the street factoring in? How come the EPS goes up by so and so? They are expecting the value-added products, that was around 30%, to scale up to high 30%. How is that possible? Well, they have been mentioning this, in their con calls as well as in the presentation that they put out. Also, they had some high-cost inventory of, SMP. And out there as well, they are expecting that, in fact, that high-cost inventory will be out of the way. And if you just look at the margins, well, they've come down drastically to around 5% in comparison to around 11% odd. So both of those are the triggers that are going to be working for it. And that's why the margins are expected to improve from here. And that's why the EPS as well is expected to move from here. Well, next up, let's move to Amara Raja. You have Mr. Gala, who was a TDP member. He was also a member of parliament from Guntur. This time around, he wasn't, standing for elections from out there. But in fact, there is that bit of the TDP play, so to call it, for Amara Raja. Besides that, besides the core business, they're also talking about cell manufacturing facilities. And the cell manufacturing facility, well, that's something that is likely to come on stream in the second half of FY26. The capex that they've laid out is close to around 1,200 crores. They're talking about an asset turn of around 1.3 to around 1.4 times odd. So that's going to be the key trigger fundamentally that we're looking forward to. In terms of valuations, the stock has gone up big time, but it still trades at around this, 24 or 22 times odd. So that's on the valuation chart. Moving to the cement and the infra themes then. The street believes that Mr. Naidu is pro-development. And because he's pro-development, cement will do well, construction as well will do well. So there is that pro-development agenda that's likely to come. And remember, when he was last in the hot seat as a CM, Amravati, that was the capex plan that the street was looking forward to. But when he lost the elections, well, then that complete plan went out of the window. So they're hoping this time around as well, the Amravati big capex plan will come on stream again. And because of that, you've seen stocks like KCP, you have Ramco, Sagar Cement, all of them, well, that's their capacity that they have in Andhra Pradesh as well as Telangana. And that's the percentage of their total capacity. So as you can see at the bottom of your screen, these three companies, in fact, 80 to 100% of their capacities are in this region. So they could stand to gain. The other couple of names, NCCA and KNR Constructions, both of them saw a big rally this week. A lot of factors out there, but just to highlight three factors. One is that Amravati capex plan that we're talking about. There were also some pending dues that didn't come about. The street believes this time around they'll get cleared out. So pending dues will get cleared out. And besides that, you have the fresh orders that could come about. So you have Heritage Foods, where he is the promoter entity. Amara Raja, there's a bit of a TDP connect out there, and there's a fundamental reason as well. And cement, as well as infra companies, they could stand to gain. Undoubtedly, the MVP of the last week was Mr. Chandrababu Naidu. Well, Nilesh, when we come across to you, any of these companies are you interested in? Do you all hold them? I mean, what a move you're talking about. Heritage Foods, in a single week, it goes up close to 50%. Yes. And the last time around as well, these are the same group of stocks that did well. In 2018, 2019, the Amravati capex plan, smaller cement companies will do well. What do you like from there?
So, well, we own Heritage Foods. That's the disclosure.
Lucky all.
Yeah, absolutely. It just looks like we are plain lucky. But we had owned it. We bought it about 3 months ago, and this was essentially more as an investment in the consumer space, and within the consumer space, the dairy space. And I totally agree that the business strategy essentially has tremendous potential. If they execute well, achieve well, this whole expansion in the value-added portfolio and the kind of earnings growth that you could see, purely because the dairy cycle had hit a trough a few quarters ago. So I think a combination of all of those things essentially kind of attracted us to that. We didn't honestly anticipate this event one bit. So we were plain lucky. I still think they execute really well.
Yeah.
So I think there's still probably some more potential, some more way to go. The rest, we haven't looked at it in a very constructive way, but I genuinely believe that you're going to see a lot of infrastructure activity in Andhra Pradesh. Probably that state has not got its fair share in the last 10 years or has been languishing. The fact that you're going to build a new capital, that's going to involve investments of thousands of crores. I think, yes, the construction space should do well out there.
And a couple of these infra themes, I've been speaking to a few analysts because cement is my core, but for infra, I need to check around. And a lot of the sell side and buy side guys, they said, the plan that he had was beautiful because they had gone there 2017, 2018, 2019. And there was an element of how he wanted to make Amravati something like Singapore and, those kind of comparisons. and all of them went out of the window. And the problem was when Mr. Jagan Reddy came on the hot seat, he cancelled some of those projects, and some of the dues as well were not released.
Yeah.
So some of these companies went through a very, very hard time. So we'll have to see how that goes this time around. But for this week itself, some of those cemented infra names did rather well.
Absolutely, and hopes as well, right? Maybe some sort of a package, a special status, a further sort of, fiscal largesse. Maybe if it comes from New Delhi, then it could only help
And he's been known
matters.
as a pro-development person,
Did you guys listen to the speeches today?
Absolutely.
So Nitish Kumar.
That was the best. I thought Nitish Babu was the best.
He said he looked straight at the Prime Minister. He said हम तो काफी टाइम से बहुत कुछ मांग रहे हैं, अब तो मिल ही जाएगा. So I mean, trust Mr. Nitish Kumar to.
सब साथ है, हम सब साथ में काम करेंगे, एकदम साथ है.
What an exciting election, right? I mean, fabulous. We were in
You
studio.
mean exciting? It was a boring election, but an exciting result.
Exciting result. Exciting result. I mean, in 2004, I wasn't, very, very active in terms of tracking politics or the markets. But just reading up, and both these two gentlemen, Mr. Naidu as well as Mr. Kumar, they were part of that cabinet as well. But at that time, they were senior members. And then suddenly they went into, into a bit of a lull when Mr. Modi came up. And now suddenly they're back in the hot seat. Both of them supporting Mr. Modi and forming NDA 3.0. So good times, I think, for the market.
Lots of bonhomie today. Wide smiles in those, camera shots that we were getting from the parliament. But just to, sum it up and coming to final thoughts, Nilesh. Now, the issue is what you have, like you have a heritage food, it's great. Someone who's, running a BHEL or a ABB, maybe they don't have to think much. The question is, where do you allocate? So help us break it up. For every new 100 rupees that has to go into the market now at 23,300, how would you split the pie?
So I think I would still believe that the three big pillars or the big three places where you would want to allocate will be the financials and the consumer pack. Obviously, in both, you need to obviously be bottom up and select your set of stocks. But I think both these sectors or themes have essentially long-term compounding opportunity, consumer and financials. Third, of course, is essentially this whole what I call as the EMI space, the energy, manufacturing and infra as a space. I think that space essentially still looks very, very good. And lastly is a combination of niche technology services and online plays, online consumer plays, companies which are essentially creating good online platforms and essentially selling those products or services to consumers. I think this as a pack will continue to receive a fair share. The area where you need to be very careful, I still think, is PSUs. That probably you might see some speed breakers in terms of the uptrend or the rallies there. I think there one still probably should exercise some caution.
Okay, all right. And guys, how excited are you about India taking on Pakistan on Sunday after last night's performance? I'm a little more afraid actually, because these guys are hurt now. They could come back, but it's going to be a scintillating Sunday evening. So I'm looking
There's a
forward.
French Open final also.
But I think India versus Pakistan
Beats that's true. I'm glad it's happening after election season is done, so you can go back to just
Make sure you make it to studio on Monday, because that India versus Pakistan is ending at 12:30 at the night.
Okay. On Sunday, there is also the swearing in.
Yes. I mean,
Correct.
that is most important.
That is most important.
That's 6 and then 8, so you have your time.
Well, we have our weekend cut out. I think plenty to do at the end of what's been a phenomenal roller coaster week. Thank you so much, Nilesh, for joining in. Great to have you here. And with that, it's curtains. I think it's time for us to take our viewers' leave as well. It's a wrap on this edition of Editors Roundtable. Don't go anywhere. News continues right here on CNBC-TV18.